This is Matthew Cratter from Trader University, and today I want to talk about why rich people have multiple houses. There's the obvious consumption reason. There are many nice places in the world. Vail is a really nice place. Diamond Head in Honolulu is a really nice place. And I suppose if you have billions of dollars, it's nice to have houses in all of these different places. On the other hand, this doesn't explain why wealthy people choose to buy these houses, which can be a bit of a headache in terms of the upkeep. Why not just do high-end vacation rentals? So I think there's the consumption aspect of this. There's also the social signaling aspect. If you have a house in a certain place, it can signal to friends and business partners that you're successful and might be a good person to do business with. But I think there's a more fundamental reason, and that's what I want to cover in this video. We have this guy at the money printers. This is Jerome Powell at the Federal Reserve. And here is poor George Washington. The purchasing power of the US dollar has gone down really since the founding of the central bank in the US, the founding of the Federal Reserve in 1913. This is what happens to fiat currencies, especially when they remove their peg from the gold standard. A dollar over time buys less and less. When I was a kid, you could buy McDonald's Big Mac for 25 cents or 50 cents. Now it's about 10 times that amount. So we have the eroding value of the US dollar. We also have very low interest rates, which is, of course, related. Both of these, money printing and low interest rates, are products of the Federal Reserve's monetary policy. And this leads to very low interest rates in savings account and other savings vehicles. So here's a Bank of America savings account where you get paid 0.01%. That's not 1%, but it's 1/100th of 1%. No one can preserve their wealth, whether you have $50 or $50 million. No one can preserve their wealth in an environment where cash is losing this much value every year, and yet you earn such low interest rates in your savings account. And so this is where real estate comes in, and second homes and third homes and fourth homes. Wealthy people use real estate as a store of value, along with stocks and other sorts of investments like that. And one of the byproducts of our central bank's crazy monetary policy is that wealthy people using real estate as a store of value creates these huge distortions in the real estate market. To begin with, when you have interest rates really low and people are looking for yield, and even dividend stock yields are low and T-bill yields are low and savings accounts, etc., this leads Wall Street to create products that have higher yields. And one way of doing that is you can buy up single-family homes. This is what BlackRock's been doing. You can buy them up, you can package them up into institutional funds, and then you can use the rental yield as a source of yield for the fund. Now, the problem with this is it does raise the cost of housing for just normal middle-class people who want to own a home in that neighborhood, and they're being priced out by groups like BlackRock that are paying 20, 30% above the normal market value. And they're able to do that because they can still generate a decent yield for their institutional investors, some of which are pensions and some of which are wealthy individuals just looking for a hedge and store of value and a source of yield. Now, I used to do the same thing. I owned a few single-family homes as a way of parking excess cash, and I normally would have perhaps parked that in T-bills or in treasuries in the early 2000s, back when they were yielding 5 or 6%. But with them yielding a negative real yield, when you take into account inflation, I thought it made more sense to own a few single-family homes, and you not only benefit from the cash flow that's thrown off by them, but you also benefit from price appreciation. So real estate can function as a really good store of value. I sold them late last year and moved the money into Bitcoin once I realized how much better store of value Bitcoin was. If you're finding this video helpful so far, be sure to hit that subscribe and like button, and maybe share this video with a few friends who you think might be interested in it. Here's the classic article from the Wall Street Journal about BlackRock and other funds buying up single-family homes and crowding out normal home buyers. There's the same thing happening at the international level with global capital flows, especially flows from our large trading partners like China and also Russia as well, buying up housing in desirable cities like New York City, like on Manhattan, Los Angeles, Southern California, etc., as well as obviously places like Vail and Hawaii that we talked about before. This creates price competition, albeit at a different level. These are very expensive properties, but it does trickle all the way down, and it does end up hurting the middle class and the working class when you have, whether they're mansions or whether they're packaged up funds of smaller single-family homes. This crowds out normal people and paradoxically creates a housing shortage. Vancouver is the great example of this, where you had a lot of Chinese money coming out of China, going into Vancouver, and you have a lot of houses there still just completely empty and being used as a way of getting money out of China and also as a store of value. Very interesting tweet just a couple days ago from Justin Trudeau out of Canada, saying that he's going to ban foreign ownership in Canada for the next 2 years and tax existing vacant foreign-owned properties. I'm sympathetic to this. I don't like to see government meddling in free markets, but I am sympathetic to what he is going after here. Unfortunately, he doesn't. He's an opponent of Bitcoin. He doesn't understand that making it easier for people to get Bitcoin is one way of diverting these capital flows from the housing market and putting them into Bitcoin instead. But this is definitely a sign of the times. Something similar looks like going on in New York City. This is an article from December of 2020. I don't know if this is still a plan to tax second homes in New York City, but these are the kind of distortions that are created in our current fiat financial system, where there's not a good store of value. Central bank monetary policy is one of the largest drivers of wealth inequality. This is something that Democrats do not talk about and Republicans do not talk about. Both sides of the aisle are content to, for the most part, support central bankers and investment bankers. When your currency is a very weak store of value, it creates distortions in the stock market, as we've seen over the past 11 years, where it's just really gone straight up, and the real estate market, as sophisticated investors seek a place to preserve their wealth as they try to exit cash and move into stocks and real estate. And then this ends up crowding out regular people who are just getting started investing in the stock market. They have to pay very high PEs. And also regular people who just want to buy a house. Maybe they're going to start a family and they don't want to have a landlord and they just want a roof over their head. So this is what central bankers have given us. Bitcoin fixes this. And it's really easy to see this once you understand how Bitcoin is a much more safe and a more efficient store of value than real estate. Bitcoin is much more liquid. It's easy to move in and out without paying very large fees. And you can buy $1 billion of Bitcoin, you can enter and exit, and you don't pay very much in commissions or fees or slippage. Unlike if you buy or sell a real estate property, you're paying anywhere from 4 to 7% commissions and taxes, etc., and it can be much higher in some places. Bitcoin is also much more difficult to confiscate. I would say it's impossible to confiscate if you hold it in a really smart way and hold your own private keys, don't leave it on an exchange, versus a house. For example, if the Canadian government really turns against these foreign holders of their real estate, especially if the people don't actually live in Canada, we could reach a point where properties are actually being confiscated. And this is obviously happening at various points in history, the Russian Revolution and the Chinese Communist Revolution. So Bitcoin is much safer and much more liquid than real estate. Also, when you hold Bitcoin, at least currently, there are no property taxes, there are no homeowner association dues, no maintenance costs, no property insurance, all these costs that are associated with holding a capital asset like a house. Also, when you own Bitcoin, Justin Trudeau can't touch you, cannot penalize you, cannot tax you. Biden can't touch you. Janet Yellen can't touch you. And in this way, it's a way of hiding and storing your wealth, whether you're starting off with a very small amount or a large amount. Bitcoin is really for everyone. And unlike a house or investment property, you actually don't need to have a lot of money to buy Bitcoin. You can start buying Bitcoin. You can buy as little as $5 using something like the Strike app on your phone. Anyone can start saving and storing their wealth in Bitcoin, which is really the best savings technology ever invented. A lot of people at this point in the video will say, well, but isn't Bitcoin too volatile to be a store of value? And this really shows a misunderstanding of what a store of value means. Good stores of value exert themselves and manifest themselves over multi-year or multi-decade periods. And so no one would dispute that California housing, single-family homes in particular, especially in nice parts of California, the coastal parts, have been excellent stores of value really since forever, and certainly since the early 70s. And yet we've had these periods after the dot-com bust, especially in the Bay Area, where housing prices went down anywhere from 30 to 50%. I talked to people in 2002 who had bought a house in Palo Alto for $5 million, and it was worth $2.5 million just 2 years later. So this really did happen. It also happened really at a national level when the housing bubble burst in 2007 and really bottomed in 2010 or 2011, depending where you lived. And so this is an example of something, an asset class that has been a really good store of value. It's had large drawdowns. You can argue that Bitcoin has had larger drawdowns, anywhere from 85 to 90% at times. So Bitcoin can be more volatile. This kind of volatility is, of course, solved for by reducing your position size. So if you want half the volatility, you put half the amount of money in. So stores of value can be volatile as well. Stocks have been volatile over the past 20 years, but they've been a superb store of value as well. Obviously, Bitcoin has outperformed both housing and real estate, and the stock market as well has outperformed even the QQQs and tech stocks. I'm going to be without internet tomorrow, or good internet connection, so I will make my next video on Sunday. In the meantime, hope you all have a great Friday and a great weekend, and I will talk to you soon. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you on Sunday.